Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets? Well, we're kind of moving in a sideways pattern. Right now, I'm expecting a little bit of a pullback down to about the 200-day moving average on the NASDAQ and 200-day on the S&P. There's some gaps to fill down there, and then I expect the blow off top. But right now, we kind of have a short-term top, if you will. Short term meaning we've run up, right, about 22% off of the lows, and we're making a short term top, probably come back a little, but we're still going higher. They're going to push this up one more time. They're going to push it up to a new all-time record high. Now, Bitcoin's already made its new all-time record high. That's up about 40% off of the recent low, right? It was down around 75,000, now up around 110,000, but that's at a short-term top also now, which is kind of funny. You got the Bitcoin conference in Las Vegas this week, 30,000 people are there, man. Bitcoin, right? That's really going to be fascinating. You got Peter Schiff talking about, he'll be the only one there that doesn't own any Bitcoin. But anyways, it's very interesting that that's going to create a short-term top. That's the top in the market. Probably see it pull back down to around 90,000 from up here at 110. Maybe it gets a little push during this conference, right? Maybe they push it up to 115 before they pull it back down. But I do think it's still going to push higher also. I think these blow-off tops are coming. They're going to push liquidity into the marketplace. You can watch the junk bonds. Liquidity is being pushed into this marketplace. Has to go somewhere. Going into the stock market, going into Bitcoin, going to push them to new record highs before the rug pull. Now, there's going to be a rug pull, and it's going to be a big rug pull, right? But they're going to push them up to a new record high. You're going to have a chance to get out still. Now, the housing market, that's a little different, right? We're going to get a housing market bloodbath, if you will. Now, why do I say that? Well, this is the worst market we've had in 50 years. You got to go back 50 years to find a time where house sales were at a slower rate. House sales they're just non-existent, right? And now what's interesting, so we got volume going like this, right? And price always follows volume. Price follows volume. The volume's going down, 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 and that's what the price is going to do. It's going to be going down, down, down. Price always follows the volume. Now, just this last month, 1 out of every 7 homes that were in contract. See, I'm a real estate broker. We put the house into contract, put it into escrow. 1 out of 7 fell out of escrow. Just this last month, that was over 50,000 homes. 50,000 homes that people wanted to buy. There's the demand, but something went wrong. They couldn't get the loan. They couldn't qualify. They had too much debt. Now, it's fascinating to me that we're going to be, well, we're the same situation as back in 2008. Now, 2008, household debt was going like this, going up, going up, going up. And then you had the big real estate bust, right? The subprime crisis. People are blaming on the subprime, but what it really was people had too much debt. They couldn't make the payments. Yes, the mortgage rates went up, right? That's what the subprime mess was. A lot of adjustables. They couldn't make their payment because they had too much debt. Well, today we're at a record high $19 trillion of household debt. So from 2008 to 2017, the debt kind of even came down a little bit. But now we're skyrocketing back higher. Household debt is going to new levels. Why? Because people don't have money. They got to buy their groceries on credit cards. They got to pay for their gas on credit cards. They don't have money after they're done paying their rent, after they're done paying their mortgage. So the household debt, new record high, $19 trillion. This is going to be a problem for the real estate industry. People are not able to pay their mortgages right now. Now, the new subprime, you see everybody goes, but Mike, that was 2008. We had subprime loans. We had those adjustable rate loans, Mike. We don't have that now. What we got is a replacement for that, right? We got the FHA loans. FHA loans, 3% down, 3% down. Since 2008, these have gone up 1,000%, right? Everybody's getting FHA loans. They only got 3% in the game. And when you only have 3% in the game, that creates a problem, right? Well, because your mortgage is already underwater, your property taxes just increased, your insurance has just been canceled. You just go, I just want out. 80% of people that bought homes in the last 3 years, well, they got buyer's remorse, and for good reason. They're already underwater, right? Already they can't make their payments, and they're not making their payments. That's why 12% of FHA loans are not paying on, which is kind of fascinating to me. But this real estate thing is going to go down for many different reasons. Now, the real reason it's going to go down is the debt, not just the household debt, which has at a record high, but the government debt, right? The government debt. Now, people think, like if you talk to Dave Ramsey, you talk to Barbara Cochran, you got to get out there now and buy a house, because once they drop the mortgage rates back to 2%, well, these houses are going to take off and go higher and higher and higher. Well, it's not going to play out like that. I got news for you. Look it. Okay, so they're telling you to buy now and refinance later. I'm telling you, buy now, rates are about 7%. When you go to refi a year, 2 years from now, they're going to be up above 10%. Now, why is that? Nobody believes that. They say, but Mike, the Federal Reserve, they're going to drop interest rates. And that's true on the short end of the curve. That's the 3 month, the 6 months. They're going to drop those down to 0%. I believe that. But you know what that's going to do to the long end of the curve? It's going to send it higher and higher and higher. And people don't get this, right? Right now, nobody will touch our debt anymore. Nobody will buy it. We just had a 20-year bond auction that failed, right? I mean, there were 0 buyers at the auction, right? So the Federal Reserve, they had to step in and be the buyer of last resort. And they're the ones that are going to have to buy all of our debt, all of our debt. Nobody wants it anymore. People realize that these bonds, well, they're going to pretty much be worthless because we cannot pay our debt back. We're going to have to default some way, right? Now, we'll probably default by printing money and hyperinflating, right? But the thing is, nobody's buying our bonds at 5%. So you're going to have to see the rate go up to 6%. Up to 7%, up to 8%, maybe as high as 10% before you get any sucker to come in and loan our government money for 20 years that our government has no way to pay it back. So they're going to have to raise the rates on the long end of the curve. And what's that going to do to your mortgage rates? Well, they're going to go up along with it. Now, what happens when mortgage rates get above 10%? Your house starts going down. It's a death cycle. It's a death spiral. They're already dropping. I mean, this is the most number of price reductions we've ever had is right now, right? I mean, we got price reduction, price reduction, price reduction. Oh, thank God somebody finally bought my house. We're in escrow. Oh, no, it fell out of escrow. Oh, no. Price reduction, price reduction, price reduction. Oh, someone else bought it. Okay, we're in escrow again. Please, please close. Please close. Oh, no, they couldn't get the loan. The bank doesn't want to lend the loan. Banks are now rejecting loans at a rate of over 40%. 40% of people that are applying for home loans are getting rejected. Why? Because they're in debt too much. Household debt at a record high, 19 trillion. Yes, there's demand for the houses, but nobody can afford them at these prices. Look at those poor Airbnb people. They jumped in, bought 2, 3, 4, 5 homes, trying to run a hotel business in the neighborhood, right? Well, the neighborhood said they don't want that anymore. So they said no more Airbnb. You got to do a minimum of a 6-month lease to a 1-year lease. Well, what are those people doing? They got major buyer remorse. What are they doing? They're dumping those houses onto the marketplace. Airbnb, well, it's a crash zone, right? I mean, these people are crashing and burning. Who else is crashing and burning? Well, the new home builders. Now, what's interesting, here's the thing. New home builders, they have to sell, right? They can't leave that house sit empty or they're out of business. They have to sell that house, get the money in so they can go build some more houses. That's what they do. They build houses. So they don't really care how far they got to drop it, and they're dropping it a lot. And how they're dropping it is they're trying to hide it. They're trying to hide it because they don't want to get the people upset. The people that bought in, let's say there's a subdivision of 100 homes and 20 many people have already bought and they paid $1 million? They can't just drop it to 900 and 800,000. The people that bought early will be very upset. So what do? They give you subsidies, right? They subsidize your loan. They say, hey, we'll give you a 2% mortgage rate. Okay, but they had to pay 50,000, 100,000 to get down to that level. We'll put a swimming pool in your backyard. Okay. You see, they give you amenities. They try to keep the price up at $1 million so the other people don't get upset, but they can't. They're dropping them. They're dropping them. They're dropping them. And they're doing it kind of secretly with giving them amenities, with buying down their mortgage rates, different things they can do to create buyers for these homes. They have to get rid of these homes. You see, now when you're an individual and you just got one house to sell, the only thing you can do is price reduction, price reduction, price reduction, price reduction. And that's what we see going on in most places. Of course, not your area. Your area is still going up. I get that. I get that. You live in a great area. It's never going to go down. Never, ever going to go down. But a lot of areas are already coming down. And you see, this is a problem, right? This is a problem. You see, the $1 million house that you could go out and buy today for $1 million, you could wait 2 or 3 years and you're going to see that around $400,000. Are you going to be happy up here buying at $1 million, or do you want to wait till it gets down here to 400,000? Now people say, Tall Mike, he's a crazy guy. He's just talking crazy stuff on YouTube. He's just doing that fear porn. He doesn't know what he's talking about. And you got to do you. If you want to go out and buy that $1 million house, please go out and buy the $1 million house. I'm a real estate broker. We need business. It's never been slower. You got to go back 50 years to find a slower time. 50 years ago, what was the population of the United States? I don't even know, but I do know it's a lot less than it is now. So you have to revert back 50 years. So if you want to go buy that $1 million home that's soon going to be selling for $400,000, please go buy it, right? I mean, we need it. Us real estate brokers, we need it. We're in big trouble. Nobody's buying any houses. We're living this, we don't get a paycheck unless we sell something. Unless we can bring one of you suckers in to buy that $1 million house, we don't get paid. It's that simple. Now the banks, they're in trouble. They're in big trouble, right? They're in such big trouble. They don't even want to give mortgages out there because they see the writing on the wall. They know that $1 million house is going to be half off soon. And they don't want to be the bag holder this time. They were the bag holder in 2008. What happened? We had the bailouts, right? We had to bail out the banks because they were the bag holder. They're going, we don't want to be the bag holder this time because we're afraid the government won't bail us out. And they're correct. This time the government's not going to bail them out. They're actually going to do a bail-in. What's a bail-in? That's where they're going to steal your deposits because that's the only way that all these banks, big banks, little banks, they're all insolvent. They're all already bankrupt. They do not have your money. They have lost your money. I tell you this time and time again. Look, once again, you got to do you. If you want your money in the bank, keep your money in the bank. I keep very little in the bank. Yes, I have too much in the bank. I'm trying to pull it out secretly, quietly, pull it out, put it in some real money. I like silver at this price. Silver is dirt cheap down here around $33. Man, that's a bargain. They're just giving that away. Look, you're going to have a big regret. Now, look, I started buying gold when it was $300. $300, my big regret. I didn't buy more. I wish I'd bought more because it's above what? You got to pay $3,500 now, but I was buying it at $300. I should have bought more. I didn't have that much money back then, so now I have to pay up. I have to pay $3,500. You're going to look back on silver and go, I could have got silver at $30. Now I got to pay $300. This is going to be a big regret for a lot of people. Don't be one of those people that regret, I saw it at $30. Tall Mike told me to buy it at $30, but I didn't listen. So now I got to pay up. I got to pay $300 for it. Look, things are changing. They're changing rapidly out there. And what's changing is the debt, right? The debt. Look at the Donald. He doesn't want to stop spending money. He's got this big, beautiful bill, and he's going to get that passed through, right? It's going to add $5 trillion to our debt. We're at 37. That'll push us to 42. Look, we're going straight up, straight up, straight up as far as the debt goes, and that's why gold's going straight up, straight up. It follows the debt market. Debt going to increase, gold's going to increase. I'm telling you, this is a problem. Look at, there's a spending problem. Household debt, record high, 19 trillion. That's why houses are going to crash. It's going to be a bloodbath in the housing market. I know I'm the bearer of bad news, but if you like this stuff, give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.